Hello traders and welcome back to our channel. It has been a month since our last video and we promised to post more often this month. I have been busy with day trading and took a break from creating content. I hope you understand. In this video, I will share some thoughts on trading and of course, we will analyze some setups that we shared on our premium channel. You will be impressed by how simple they are. Trading involves executing trades, managing risks, and dealing with the psychological aspect. The strategy is not the most important part, to be honest. I know there are traders on social media who deceive others by sharing screenshots of big profits every day. They make it seem like they always enter trades perfectly and never have any losses, which is impossible. Only Bernie Madoff pretended to always make a profit, and you know how that ended. Social media is full of such people, so be careful. In the world of finance, if something seems too good to be true, it's usually a scam. I aim to provide you with a genuine glimpse into both the highs and lows of the forex market. I'm not just going to throw some fancy MT4 screenshots at you. Instead, I'll present a verified track record. Sure, statistics might not be the most thrilling aspect, but let's face it, we all enjoy indulging in the trading lifestyle and admiring those exotic cars. Ultimately, the choice is yours. Do you want to learn and grow as a trader or simply be entertained? It's a quick process that takes just 5 minutes to export your account track records onto platforms like MixBook or FX Blue. These platforms have earned a solid reputation and serve as independent audit platforms. Now, have you ever wondered why most traders hesitate to share their track records? It's quite simple, really. They can't back up their claims with actual results. It's astonishing how difficult it is for them to showcase even a single track record, a genuine one, not some manipulated Excel sheet. Let's be honest here, my friends. Excel sheets are great for keeping a trading journal, but they differ greatly from real results. We trade with real accounts, which means we have to deal with spreads and commissions from brokers that are simply unavoidable. Trading requires a great deal of humility, especially when we expose ourselves to the public eye. I believe this is the main reason why other traders hesitate to take that step and be completely transparent with their audience. Now, as you may know, I currently offer a service to fellow traders, a signal service. In such cases, showcasing a track record becomes essential. So, if you're providing a service like mine, it's only fair to demonstrate your track record for the world to see. Let's get back on track, focusing on the part that you enjoy the most, learning and improving your trading style. I will demonstrate various types of entries I took on this specific pair, the US dollar versus the Canadian dollar.
Introducing Mugen Markets. Mugen Markets is an A-book broker, providing you with direct market access and ensuring transparency in every trade. They're currently working towards obtaining regulatory approval to delivering the highest standards of security. Experience lightning-fast crypto deposits and withdrawals. Mugen Markets brings you ECN execution, giving you direct access to the interbank market, ensuring the best possible pricing. Join Mugen Markets today. Link in the description of the video.
Although I primarily engage in day trading during this phase of my career, I never neglect the analysis on higher time frames. Currently, we are examining the daily time frame, where we have identified the supply and demand zones, as well as a trendline liquidity level. Previously, I would have simply referred to it as a trend line, but liquidity trendline sounds more appealing now. I am marking the support and resistance levels that are located close to the price. On the 4-hour time frame, we observed a supply zone and the price displayed signs of bullish weakness. Whenever I encounter a swing, followed by a correction and a second swing, I always keep an eye out for an AB equals CD pattern. This process has become quite intuitive for me. The completion of this pattern occurred well above the supply zone. I was searching for a sell trade and shifted my focus to the 2-hour time frame. As you can observe, I discovered a distinct demand zone that will serve as my take profit level. Moving on to the 1-hour time frame, we'd encountered a clear double top formation accompanied by a divergence. I shifted again in 30 minutes and highlighted the liquidity level, refining the demand zone to a more specific order block. Despite the fact that the price touched a previously consolidating zone, which indicates a significant volume accumulation, I decided to enter a sell trade and share it with my premium members as well. However, the price quickly moved against our positions, testing the high and then immediately returning to the break-even point. We can observe multiple attempts by the price to break the support level, all of which failed as it bounced back in an upward direction. At this point, I decided to close 50% of the position due to the trade going against us. It is better to minimize the loss in such situations, even though we strictly adhere to risk management principles and only risk 1% of our capital per trade. The price touched our entry level once again and then stopped us out. As we can see, the price completed the AB equals CD pattern and dropped from there. Perhaps we should have exercised more patience in this case, but trading involves both wins and losses. I am here to show the complete picture, whether you like it or not. With the start of a new week comes new opportunities. Although we didn't profit from the initial AB equals CD reversal move, it doesn't mean we cannot join it. Currently, we are analyzing the 15-minute time frame, which is my preferred one for entries. The price was retracing towards a crucial resistance level. First, let me clean up the chart a little bit by removing the drawings. On the 1-hour time frame, we observed a double top pattern followed by a break and retest of the neckline. The higher time frame analysis is consistent with our bias on the lower time frame. Therefore, I decided to enter a sell trade at this point, and, of course, I shared it with the premium channel. The take profit level is near the lower wick on the left side of the chart. The price strictly moved into profit, achieving a 1-to-1 ratio. Instead of taking partial profits, I chose to hold the trade until the final take profit level while moving the stop loss to break even. What do you think? Should I have taken partial profits in this case? Please share your opinion in the comments below. As you can see, the market stopped us out again at break even. Although our sell bias didn't change, it seemed that the market needed more time for a larger pullback. I drew a closed supply zone and patiently waited for price action. Eventually, the price broke above this zone with a strong bullish candle, indicating the absorption of liquidity. I switched to the 5-minute time frame to look for a sell entry. I noticed a decrease in bullish momentum and several candles that failed to close green, leaving significant upside wicks. The price then dropped in the downside direction and retested the previous high. Luckily, our stop loss was safely placed, and this move didn't threaten the trade. The price continued its decline nicely. After experiencing one loss and one break-even, I was eager to see some profits and managed to close the trade halfway to the target. In this case, I didn't prefer to take partial profits. Price didn't respect the support level and broke below it, reaching our full target. And that concludes our analysis for today's video. We examined the price action on multiple time frames and identified potential trade setups based on patterns and market conditions. While we encountered a break-even stop-out and a partial profit-taking scenario, it's important to remember that trading involves both wins and losses. Flexibility and the ability to adjust our trades are essential skills for any trader. Remember, it's important to continually refine your trading approach, learn from each trade, and assess the effectiveness of your strategies. Trading is a journey of continuous improvement, and staying disciplined and focused will help you navigate the ever-changing markets. If you found this video helpful, please give it a thumbs up and consider subscribing to our channel for more trading insights. Also, feel free to leave any comments or questions below, and I'll be happy to address them. Thank you for watching and happy trading.